as well. Thank you so much for joining us on Buy Now Sell Now.
If you look and compare the relative charts of 4 to 5 stocks, which is JK Tyre, MRF, CET, and if you compare those stocks relative to the auto index, it seems that JK Tyre has sharply outperformed the overall sector. There was a very good rise in JK Tyre's stock in somewhere around last year, and post that it is just consolidating. So the dip that we are seeing today, I think that is an opportunity to buy. Also, if you look at the overall auto index, that has been an outperformer. We are almost heading towards that new high in the auto index. If it manages to cross that 12,200 mark, that will be the new high, and 11,800 is where the auto index is currently quoting. So there is not much of a correction. When we saw some broader selling happening about a week back, there is not much correction in the auto sector. And I think auto sector as a whole is going to outperform. Despite of the chip shortages, despite of so many doldrums that we have witnessed, the auto sector I think will outperform. And out of this, I think from the tire space, JK Tyre should do much better, given the fact that it is relatively outperforming. Also, it has taken support near that 61.8% levels, from where it should now starting to show some consolidation and bounce back. So I'm expecting JK Tyre to reach towards the level of 180 with a support somewhere around 120 on the downside. As long as that support is intact, I think any dip should be used as a buying opportunity.
There you have it. That's the view on the tire space.
Has formed a double bottom around that 2550 level and showed a very decent bounce back from there. I think the overall structure looks good. The retracement is somewhere around 61.8 to 50%, and from here I think an up move can start. So hold on, it's a good stock. Overall trend remains bullish. Short-term consolidation is possible, but I think the stock is headed towards 3,400. So hold on with a stop loss of around 2650 and 3,400 as the target.
1,000 rupees is the buy price for Ravi Joshi for Aurobindo Pharma. That particular counter is now hovering around 660 rupees per share mark. What should he do? Do you think he should book losses or continue to hold on to this particular counter?
See, Cheryl, overall the pharma sector had been under pressure, and especially Aurobindo Pharma. We can clearly see it corrected nearly around 30 to 35% from its cost price. As the pharma cycle turns back on the upside, it's some time that the cycle has been on the down, so it can turn up on the upside. Aurobindo Pharma should then do well, but he has to extend his time horizon to at least a year or 2 years before he can think of getting back his cost price. But if he can hold on, I think the stock can even cross back above that 1,000 level. So it's just a matter of time. Hold on over here, and possibly he can do some kind of an averaging at this level, as long as 550 on the downside remains protected.
Okay, Glenmark Pharma is the name of the counter, Ashish, and coming to you on this one, we've got Venkatesh from Hyderabad who's asking about this. He's holding at levels of 545. Can he average his acquisition price at this level?
Pharma is moving between two bands. One is somewhere around 545 to 550, the upper end of the band, and the lower end of the price range is around 460. So that's where it has been moving. It is nearly, I think, somewhere around 4 to 5 months since then. It has not broken out either on the upside or the downside. So I would suggest there is no point averaging now over here, because it's not too far away from its cost price. Just in case the stock shows a dip towards that 470, 460 mark, average it out there, and then possibly we can expect it to break out on the upside. The stock looks good. There is consolidation going on. Once the breakout happens, I think it is going to show a very strong impulsive rise towards that 650 or 700 mark. So average on dips towards 470 is what I would suggest. Yes, if you look at the overall stock performance, it has done exceptionally well compared to other NBFC stocks. If you look at those, and then especially if you compare it with iBull or Housing Finance or those kind of companies. So if you look at the overall sector, interest sensitive sector and the NBFC space, I think Cholamandalam Investment and Finance has done much better. There is a potential the stock can even go towards the level of 800 on the upside. It's just about to break that 52-week high, which is near around 670. So I think he can hold on to the stock. The stop loss for the stock has to be maintained strictly at around 580 levels on the downside. In case 580 is taken out, some consolidation is expected, but I am bullish on the stock.
All right, this one also is for you, Ashish. This one is for Vimla George. She has PI Industries, which she's purchased at 2,800 rupees per share. How much profit can I expect in the next 1 year time frame is what she's asking. Tricky question. Will you be able to answer this one, Ashish?
Yes, it's a tricky question given the fact that the stock has broken its support around 2,800 levels where the investment price is, and it is quoting somewhere around 2,500 now. But nevertheless, the long-term trend remains intact for PI Industries. We have seen that the stock has given returns to its investors, and also try and keep one thing in mind. From March, the stock was somewhere around 1,100. It has increased to around 3,000. That's nearly 3 times increase in just 1.5 years. So you need to be careful entering into stocks after such a huge run-up. But nevertheless, the long-term trend is intact. Short-term volatility might exist. So over a period of years' time, I think the stock can again touch back that level of 3,600. So hold on to this stock over here. Stop loss has to be maintained at around 2,100 on downside. Not really, because I have not come across this stock earlier. But I think overall, looking at the chart right now, he can hold on to the stock. Now, looking at the overall metal performance, we have seen a dip over past 3 months in the overall metal sector. And from there, we can clearly see that right now, over past 2 days, there has been some kind of a recovery happening across the metal space. So for now, hold on to the stock, maintain a stop loss of 5% on the downside, and get out just in case if that gets triggered, because that's a short-term call that I'm giving on the stock. I'm not sure about the long-term perspective. The support is somewhere around 480 levels. As long as that is intact, I think it can move back towards that 600 mark over short term.